So we are starting to get more information about what caused yesterday's flash crash in the crypto markets that we still have not recovered from, not even close. So if you weren't paying attention last night, 7 p.m. Eastern New York time, we instantly went down from 91,000 Bitcoin all the way down to below 86,000. Since then, we have only descended even lower to 84,500 currently, and we have been looking so good for the week up until this point. We were above 90,000 for 5 straight days. It looked like we were building strength on the charts. If you recall, we had been in a 6-week downtrend from October 10th, the liquidation crisis, all the way down to about a week ago. And then last week was the first up week in 7 weeks, which matches exactly the amount of time we were in a downtrend last February and March. It was a 6.5-week downtrend, and then we sharply reversed course in the first week of April. So it certainly looked like, we were in line to send to 95, 96, 98,000, plus the Bitcoin fear and greed had been below 16 for 11 days straight, the longest it had been at those levels, below 20 specifically. And every single time the Bitcoin fear and greed index drops to these low levels, 10, 15, 20, the prices almost always pump a week or two later. And that is just not what we got last night. And if there's any good news right now, it's that we do have our answer about what caused the crash, and it has pretty much nothing to do with the crypto markets as a whole. It has to do with a totally unrelated currency market halfway across the world. Now, a little bit of backstory first. So for the first few hours after last night's crash, nobody really knew what was going on. It looked like one big institution had just unloaded a ton of Bitcoin, maybe a couple hundred million dollars worth, and then that caused a bunch of liquidations to happen one after the other, like we've seen repeatedly, but no one really knew why this institution was selling. Some people thought maybe they were trying to front run December dumps, December being a bad month. Maybe people thought they were just front running 4-year cycle worries and they think we're going to go much lower. Nobody really knew. And now just a quick update from my partner exchange, BTCC, fully available for traders in the USA like myself, in Canada, most spots of Europe, and pretty much everywhere else. No VPN or KYC is needed. So we are now into December 1st, and BTCC will be kicking off a big new trading campaign / competition in the coming days. I will be giving you more details of that as the days roll around. And meanwhile, there are a bunch of other really cool campaigns going on. They're like the first futures trade protection. If you open up your first futures trade on BTCC and it results in a loss when you close it, BTCC will cover the first $50 of that trade. If you want to get into this campaign, or if you just want to create an account at BTCC, use this link at the top of the description area. Now let's get back to the specific reason that has caused the crypto markets to nuke. And it has to do with, of all things, Japanese bond yield prices randomly spiking at the Asian market open Monday morning, this morning, which was last night around 7 p.m. New York time. Specifically, Japanese 2-year bond yields hit 1.01%. That's the first time they've crossed the 1% barrier in 17 years, since 2008, which of course was the global financial crisis. And then also Japan's long 10-year bond yields, it doesn't say it here, they reached even higher, 1.78%. And that's the first time they've been at that level, the highest in 27 years since 1998. This sparked concerns that the Bank of Japan's long era of near zero interest rates, no rates on lending, is coming to an end. They actually think later this month, when the Bank of Japan meets, that they might install their first interest rate hike in 17 years. We've seen what interest rate hikes have done on cryptocurrency in the markets in the US. Bank of Japan, that is an equally first world economy. If they have their first rate hike in decades, yeah, that kind of news sends shivers through the global markets. And as for why this specifically caused the crypto markets to dump, well, crypto has been deeply sensitive to short-term liquidity conditions in Asia for a while, because a lot of people, since it's free to borrow against the Japanese yen, for years and years, people have been doing that and then using that new, fresh, borrowed capital to initiate leverage longs in Bitcoin. Those Asians, they do love to trade, and they love to trade risky. So once that spread widens and then borrowing is no longer free, as of last night, then a lot of huge leverage long positions were instantly liquidated. So are we going to keep going lower? Are we going to stay here? This is the bottom and then going up? Well, nobody really knows. I obviously always remain bullish about on Kalshi prediction market. Now 70% of people are betting we drop below 80K. I think price predictions and timing, it's just too difficult to do. The good news is that So this wasn't really a crypto problem. If people were selling the markets and it was going down because people were worried crypto isn't a good asset class, is not going to be here to stay, they think there's better investment opportunities anywhere, that would be cause for concern. This was a totally unrelated reason having to do with the currency markets halfway across the world, which are somehow intertwined with huge Bitcoin leverage longs. So it's not a fundamental reason with this specific asset class. That's the good news. You can drop a comment down below. You can tell me exactly what you think caused the crash. Do you think it was this Japanese yen stuff? Do you think it was other stuff? Hit the like and subscribe, and I will be back later with a new video. Bring up signing out. Catch you later.